Welcome everyone. Good morning. Good start to the week. Good Monday. It is April 3rd. So we finished March off. We're in April right now. It's the fourth month of the year. Time is flying pretty freaking quickly here. And to add to all this, right, we wrapped up the quarter last Friday. We wrapped up the month, wrapped up the week, and we saw a pretty strong push in the market. This week we have Friday is going to be market close. We do have Good Friday, so the equity market is going to be closed. The futures market, I do believe, is open until 1 p.m. Um, to add to that, which is weird, we do have a non-farm payroll report that comes out Friday pre-market, so it's going to be pretty interesting as well. So keep that in mind. Futures is going to get some action, but realistically, I don't see that much volume coming into the market. And probably next Monday after that is going to be pretty wild. So get ready for that. It should be pretty exciting. But the main concept that we have today, right after all this upside that's been going on, we got a recent push in the equity market as well, or sorry, the oil market, I should say, the energy market as well. So let's take a look at that, right? Crude is back in action as a shock oil output cut comes from major producers in the OPEC Plus group. WTI crude futures surged past $81 a barrel at the open to its highest price since late January. Now, not 100% sure where we sit with crude. I do believe, let me just check here. A lot of people were looking for that short trade, and I don't think that was necessarily I think it was too obvious of a trade, and we got this pretty strong run right now. We're sitting around $80 or so. I think the high of that move was almost $82 here after that gap to the upside. But the May contract rallying as much as 8%, while the June Brent crude opened at its best level since for nearly a month now. So advancing by the same percentage to over about 86 barrels, um, $86 per barrel. So the decision comes as the US is still entangled in the environment of a high inflation and has a potential to upend economic policies as well as monetary decision making, like the upcoming Fed rate hikes. So the output reduction will be led by OPEC kingpin Saudi Arabia with total production cuts of nearly $1.2 billion, uh, 1.2 million barrels a day. That will start in May and last until the end of 2023. Russia's recent production cuts of 500,000 barrels per day were also extended and add to the 200 or 2 million barrels per day that were taken offline by OPEC Plus in October. So together, both rounds of cuts means that 3% of the world's oil has been removed from the market in the past half a year, helping to sustain prices flowing following the U.S. actions against Russian crude sanctions and price caps. So Goldman Sachs also changed its oil production and price forecast on the latest announcement, which comes before the busy summer travel season. And winners from the OPEC Plus cuts include Saudi Arabia, Warren Buffett, EV manufacturers, while some of the losers include airlines, which we saw take a pretty big beating from this news. And the hopes for a soft economic landing might take a hit as well. Because remember, when energy prices do tend to go up, it does put some upside pressure on inflation, which could put some more upside pressure on the Fed to actually hike rates a little more aggressively and continue this unwind. So we also have all this comes amid an ongoing chess match between Biden administration and the Kingdom of Saudi Arabia. What else do we have here? So following some rushed okay, so in terms of this, right, these energy prices are continuing to rush a little higher. We have been talking about increased energy at TRADEPRO getting for quite some time, right? Looking at some of these oil prices that got dipped into, right? XLE, we had XOM and Oxy, right? All of these look like great opportunities. And this morning, I believe they're going to print very, very well. So that's something that we do have to watch out for. Let's see how this oil actually continues. If it does continue, crude oil itself, the futures are coming into a pretty strong resistance point. We'll see how that kind of shapes up. If we do manage a push back above that 82.65 region, we can probably explore that 87 area. I'm not too versed in crude. I'm just looking at it from a macro perspective, and I do still like some of the upside in this energy market. In terms of other news, there's not too much today. Tesla, right? Analysts are still arguing over whether Tesla beat or missed delivery expectations for Q1, but the EV maker recorded 422,000 vehicles um, in the past quarter, right, in Q1. So we continue to see a transition towards a more regional mix of vehicle builds, including the Model S/X vehicles in transit to EMEA and APAC. Noted the company on the production strategy. While Tesla has been charging forward with EVs, Wood Mackenzie says its solar roof technology has fallen far short of installation targets, and the latest developments are sure to add more fuel to the constant Tesla debate. So we'll see how that kind of shapes up. But Tesla, I believe it is down significantly here pre-market. We'll see if the bulls or the bears come out. So I'm going to talk about that and some of the expectations that we have following this massive rally that we've seen over the last few weeks. We also have more layoffs, this time out of McDonald's. The stock is at all-time highs. It's been pumping really well. It's about to gap into an all-time high. It's about to rip. And it's reportedly told corporate employees that its U.S. offices will remain closed early this week, so the company can announce layoffs as part of a broad restructuring. So it beat analyst expectations in Q4 earnings and revenues in January, but spooked the market after management warned that the higher input costs meant that 2023 operating margins could fall below what were then analyst consensus estimates at the time. So McDonald's said it also said that it would review corporate staffing levels as part of its business strategy. And is the company recession proof? We'll see. Right now, it is still at all time highs. Now, what is happening in this market? Last week, we had a very, very strong, convincing rally into the end of the week, right? It was the end of the quarter. There were a lot of things that lined up for bull, right? Naturally. Now, today, what we have is, I think, an overall volatility crush has happened. I think that there could be a little more upside in the market before it starts to actually try to pull back. Now, I'm not going to be trying to call tops or short every rally. I still want to see some of this bull side shape up. If we talk about the SPY in itself, I think it has legs into 414, 413 area, and we'll see what happens there. But on the futures front, right? I'm also going to talk about market maker positioning, but on the futures front, we have a level at 41.24s, 23s. As long as this area holds, I think there could be some long side to come, right? If we accept above, sorry, 41.41, I think we accept into a new distribution block to the upside. That can take us to 41.70, maybe even on the day. So I'm leaning a little more bullish as long as this level holds. Now, naturally, if we do push below that, we get into a limbo space where there could be some dips getting bought, but we're kind of in the middle of potential sideways chop because overnight we did form a fat normal distribution block, which presents a balance. Now, if the futures manage to close under 408892, right, those regions, I think we accept into the distribution back to the downside, and this rally is probably going to finish. But I am leaning a little more towards the long side. It's just that we do have a gamma wall on both the triple Qs and the SPY just at those Friday highs. So it's going to be very difficult to get through that level. But until 41.20s, low 20s break on the futures, I am going to look for some of this long side. So I posted that plan even in our free trading room community.tradeproacademy.com. So you should check that out. So far it's yielded like 15 points from the overnight session, which is a good day's work realistically. So if you want to learn more about that, check us out at tradeproacademy.com. And this was the start of the week. It's going to be a short week. I think there's going to be some decent movement. I think there's going to be some fun. There is some news that comes out this week. So keep that in mind as we go forward. And I'll see you guys all tomorrow. So thank you and take care.